How would you like to make your first million? Today we have Simon Popple join us, joining us from United Kingdom, and he's the founder of Brookville Capital. So Simon, tell us, what are the 5 steps you recommend entrepreneurs in order to make the first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Well, I think the first thing you need to work out is really simple. You need to know what your outcome is. Yeah, you want to make money, but you want to kind of like say, oh, I want to make loads of money is one thing, but you kind of like you need to sort of understand how you're going to make money and what you're going to do. And you need to kind of, this is where it's quite difficult. You need to pick an industry that has got a future, and that may not be the industry you're in. And so this is where I think a lot of entrepreneurs fall apart because um, they fall in love with an industry they know and they get frustrated but because the company they're working for is not succeeding. And they end up trying to make money in an industry that, perhaps has got a challenging future. I mean, personally, I think the property market's had a fantastic run, but do I think it's got a good future? Probably not, if I'm honest. Whereas I think gold has, and that's why I'm focusing on gold. So I think you want to kind of look at an industry with a future, and you want to know what outcome you want. Yes, I want to make money, but how do I want to make money? I want to make it by selling my book, by selling my system, and that's you need to think about not just making money, but actually how you're going to do it, and what products and services you're going to offer to make the money. So that's two things. The third thing is your kind of credibility. Now, if it's an industry that's new to you, then you kind of need to work out how you're going to get what you're going to do. Um, are you going to perhaps do a joint venture with someone who's already got credibility? Are you going to build your own credibility? Are you perhaps going to do a bit of both? But I think credibility is important. People want to work with someone who is credible and has succeeded in the area that they want to invest in or want to work in. The third, sorry, that's really the third. The fourth thing is you need some sort of training. Now, it might be you've already had training, which is all part of your credibility, but if there is more training that you need to have, for example, if you want to be a successful accountant, you need accountancy training. If you want to have a broad business acumen, then perhaps an MBA or whatever it is. And this it's all linked to the credibility. But you need kind of a training that gives you the kind of credentials that you can use to launch your business. Now, some businesses need less training than others in terms of formal training, but you've got to know what you're doing, and whether that training is a formal training such as accountancy or a training where perhaps you deal with more, let's say, a mentor or someone like that. Um, but it's important to kind of go into a situation with your eyes open. Yes, you're bound to make mistakes. You're bound to learn from what you do, but the whole idea is to make as few as possible. And I think the last thing, the fifth thing that you need to think of if you want to make a lot of money and set up a business is to kind of work out where your gaps are. Are you a good salesman? Are you just very good at technical side of your business? Are you very good legally? There's a lot of agreements you've got to put in place. That it's very difficult to be good at everything. And I think it's quite important to kind of realize where you're weak and have a really honest assessment with yourself. Because if you know where you're weak, you don't have to give someone a lot of money to join your business or something. But I mean, for example, I knew I had to have a lot of agreements in my business. So I got an agreement that was used by someone I knew. I knew that they spent a lot of money putting it together. I read it. I just changed it for my use. But there I had a very solid agreement that it probably cost them thousands of pounds. It hadn't cost me anything, but it kind of looked good and it felt good. And I think importantly, when I got people to sign it, it was quite interesting because generally they would put it in front of their lawyers, so I could see where the contentious points were in it, and that was incredibly helpful. Uh, so the next time I sent the agreement out, I knew so 9 times out of ten, I knew what the issue was going to be, and it really helps you in negotiation. You perhaps put another clause in there that sort of covers where you ended up last time, but you just need to be a little bit creative, and I think I'd add to it: be prepared to make mistakes. You will not get everything right, so even if you're going to make loads of money, don't expect it to be perfect because I can assure you it won't be.
Simon, tell us the story how you started this company.
Well, I started the company almost 20 years ago. And I took the typical route. I did an MBA. I worked in the city doing corporate finance, buying and selling companies. And then I went into property and ran some funds, both property funds and development funds. And I realized property had a good future. If I'm honest, I probably got out the market certainly 10 years too early, probably longer than that. But I thought commodities had a fantastic future. And I, it's taken me about 15, 20 years to kind of get to the level that I want to get to. But that was really important for me, picking an industry that I thought had a really good future. And it's so important to pick an industry with a future because it doesn't matter if you're really, really good and add loads of value. If you're not in an industry that people want to be in, you're kind of wasting your time.
And Simon, so tell us what are the few things that people should be looking at before they invest in gold. This is not investment advice, but what are the important things that people should be looking? You talk about finding the right vehicle, and gold is a way people that store value. Some people said that Bitcoin also is another form to store value. So, what are the people that should be looking in order to deploy capital or store value?
Yeah, sure. Look, I mean, it's the same as starting a company, to be honest. I mean, first of all, you need to be clear what outcome you want. And it's quite interesting. I talk to people and they say, I want to make loads of money. You're like, yeah, no, sure, everyone wants to make loads of money, but how much risk do you want to take? And what sort of how do you want to manage your investments? And that's really important for me. And what I have in the gold program system, which people can invest in. Now, gold itself has delivered an annual average return of about, well, actually over 10.6% since 2000, which is pretty good. And so, I say to people, look, let's invest in gold, but let's not put all your money in the risky stuff. Let's put some stuff in, a lot of your money in the lower risk stuff. And I think it's important for people to allocate capital properly. And one of the problems you have, not just with gold, but with any company, any investment, is people tend to chase the big returns. Now you can still get good returns from lower risk investments, but I suppose it's like a company in a way. People want to have a sexy.
10% is very good, right?
It is, yeah. I mean, but 10% is actually very good, and it's over 10.6. I think some research came out by Gold We Trust a couple of weeks ago that said it was 11.8 since 2000. So 10.6, that is the return on gold. Now, what I say to people is, look, that's kind of
So what I don't understand is you said that some things are more risky, also seem less risky, but it's the same commodity. How come few things are gonna be more risky than the other ones?
yeah, well, basically, what I say to people is, you've got the gold, and then you've got a fund. Now, a fund is a collection of companies. So it's a bit more risky than gold because you've got operational risk in companies, which you don't have with gold itself. And then you've got very large companies. You've got large but sort of not massive. And when I talk about very large, I'm talking about generally these companies are $50 billion plus. Then you've got others which are, let's say, 20 billion to 50 billion. And I use fantasy football format. So I say your really large ones are your goalkeepers, then you have which are very large. You have midfielders, which are kind of mid-tier type companies, and you have explorers, which are sort of forwards, which are your explorers. And so what I do is I help people put a team together. I give them a list of companies and a list of funds that they can choose from, and I give them the criteria to choose, and I help them allocate the capital by saying you should have more in, uh, let's say, lower risk positions. So what they're getting is a combination of solid type returns from gold and funds, let's say more boring companies that are 50 billion plus, really big companies, but also the excitement of smaller companies and explorers. And if an explorer finds what they're looking for, the returns can be absolutely amazing, talking about 20, 50, 100 times your money. But obviously, there's this huge amount of risk of finding those. So I, when I'm with people, I say, look, let's put most of your money in stuff you're going to get, a decent from. And yes, you can put a bit of money in things that can change your life, but you don't want all your money in things that change your life. You want to basically have a return on your money and have lottery tickets is the wrong term because I think you've got a much better odds of than you would with the lottery. But you've got a few positions that could literally change your life, and I think that's quite nice if you're starting the day out and you're like, okay, I've got some investments that can give me a good return, but I've got a few investments that could actually change my life. And I think people kind of like that. If you're having a bad day at work and one of your investments comes off, happy days.
So, Simon, the how, like for example, the return, how can be they will the return by investing in gold because it goes on price, it's a capital gain, it's a dividend. How is
Well, the return it varies enormously depending on what you're doing. I mean, if it's gold, it's obviously the price from one year to the next. But where it gets more exciting with the companies is a company, obviously the gold could go up in value, but if they finds more gold, then it's more valuable. It could reduce its costs, so it's a greater margin, and
yeah, wow, I understand.
and if it's an explorer, it could actually make a discovery which could have an impact on its price. So there's lots of different things that kind of impact the value. And some are greater probability than others. So you kind of need a basket of everything. There's no point just having all the boring stuff or having all the exciting stuff. You need a bit of a blend.
And so it came to me once that they were selling the gold forward. So basically, there was a product from Australia, and they were selling the gold forward, and it was cheaper because they needed the money to dig the gold from the mine. Something like this, I remember. I know. Is this a standard practice that people use,
Yeah,
or
it is that there's more of this happening. I think
like
one of
this you
the
can buy gold cheaper, right?
well, yeah, I mean, but you've also got the operational risk of them getting it out the mine. So that's why it's cheaper. There's a behind
It's a
um,
risk, right?
exactly. So yes, you can get it cheaper, but you're taking the operational risk they'll actually deliver the gold in the first place. This is becoming more common. There's lending to these kind of organizations, but there's various issues. The main one is actually doing the due diligence on the people who you're going to give the money to. There aren't many banks who've got people suitably qualified, geologists or whatever it is, to do this kind of analysis. And there's a lot of streaming companies out there like Franco-Nevada, Wheaton Precious Metals, Metalla Royalty, people like that, who lend money on projects. But I should think that they're kind of inundated with requests. I don't know, but I would have thought they are. And you, as a company, you kind of have to know what you're doing. And I think the lenders, if someone's lending in the space, they probably have got people who know what they're talking about. And what you're saying, yes, you can make money, but yeah, you can also lose a lot of money. So you have to be careful.
Yeah, yeah, to be risk. Yeah, has a big risk. So and when you decided to specialize only in that commodity in gold?
Well, I kind of again, it goes to where the future is. And with any business, you want to look through the windscreen, not the rear view mirror. And gold is it's for thousands of years. It's a really interesting sort of situation because you talk about you want to win the gold medal. The World Cup is made of gold. The children have been as good as gold. People are looking forward to their golden years. You don't want that person to marry a gold digger. Gold, gold, gold everywhere. But then you say to people, "Do you have any?" And like most people are like, "No." And I looked at something called a Sharpe ratio, which is a based on the that you're taking. And with gold, I think it's like 1.26%, which is amazing. It's fantastic. But a lot of people they don't have any, and I think it's crazy. I think it's really sad. And one of the reasons they don't have it is they don't know how to invest in it. And that's where I saw the opportunity. I thought, well, I can show people how to invest in it, and I use a very simple system, and that's what I'm helping people do. It's quite funny. People come to me and they go, well, what do I do? And I say, you do this, this, and they're like, yeah, yeah. What else? And I'm like, no, this is all you have to do, and it's almost too easy. So yeah, that's a
So
lot of fun, and people can make. With one of my investments, you can fact check this. I invested in a company called Chalice, and I turned I can't remember exactly how much it was, about 30 grand into about 900 grand. Well, my pension went from 30 grand to about 900 grand. It would be crazy. And but yeah, no, there is to make a lot of money. So it can be a lot of fun.
yeah. And what are the like for example, what is your take gold versus Bitcoin? So people said that Bitcoin and gold is a way to stock value, or gold versus silver, for example. And what is your opinion on those commodities?
It makes me smile because Bitcoin is depicted as a gold coin. If you look at any graphic of Bitcoin, even though it's a digital asset, it's depicted as a gold coin, which is quite funny. I think what I like about gold is you can't print it. And I know there's, saying there's a limit on the amount of Bitcoin that they will produce. But gold, it wanted more gold. You can't just magic it. It's an asset. And crypto is it's done phenomenally well. I think, we all know it's done very, very well. And if it was a few £1,000s or dollars, whatever, I would probably invest in it. But I don't really understand it, if I'm honest. And I'd much rather have something tangible like gold than a crypto.
How about
And
silver? Some people said that when gold is down, silver is high. When high, gold is down. Is it a
it's
real
no,
thing?
that's
Uh,
not speaking true. I mean, gold and silver often move in tandem. I think silver is very exciting. It's got a lot of industrial uses as well. And again, like gold, you can't print it. And a lot of silver is a byproduct of copper and nickel. And so copper and nickel prices are very relevant for silver because if nickel fall, then you probably find producers are like wary about production because you don't want to produce at a loss, and therefore you could have a significant in demand for or of silver and potentially an increase in the price. So it's quite a tight market compared to other markets.
so if someone is in love with this conversation, how people can find you, how this process work?
Yeah, I mean, if you find me on goldprogram.co.uk, by all means, drop me a line. On there, there's a free brochure, free report you can get, and I do various webinars and things like that. So people are more than welcome to do me on those. And it's I've got a book, The Beginner's Guide to Investing in Gold. Really simple, but potentially, you can make a lot of money. So hopefully people reach out.
Yeah, and not financial advice, but I think that gold is a commodity.
Absolutely, yeah, and
so and right timing and the opportunity could be like everybody else. Like on the commodity could be an opportunity. They need to find a good mentor and do their own diligence, right?
absolutely, yeah, it could be a lot of fun.
Thank you so much. And for all of you following the podcast, see you in our next episode of Unstoppable. How brave entrepreneurs like Simon break the wall to achieve the best meal. Bye for now.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.